But Guy, it was in the cruise lines, the airlines that did well, relatively speaking, on the notion that the economy could reopen.
Yeah, on a lousy tape. And I thought, we mentioned them yesterday and thought, if the news was such, those stocks should have done much better yesterday. So maybe they just took a day to catch up. So that's encouraging. Clearly, in terms of biotech, going back to Meg, I'll still say this. I still think the horse that's going to cross this finish line first has yet to be even spoken about in terms of who's going to come up with the vaccine. And I believe that. And if you look at a lot of these stocks, yes, you mentioned Moderna's up on the day, but that stock's down from 95. Gilead has been a very difficult stock to own, despite the fact that it rallied over 80, back to 65. The list goes on and on. I think the IBB, if you really want to play at home and look for a level, 128 in the IBB is a level you really have to watch in terms of breaking through on the downside. It gets concerning. I think it bounces from there. I think it closed at 130 or so today.
All right, let's talk more about the airlines. In fact, take a look at them across the board, as we mentioned, bouncing back and bucking the broader market trend. United Airlines up by 1.4% on a very down tape. Our next guest, though, warns that passenger growth isn't strengthening ahead of Labor Day weekend. Let's bring in HELANE BECKER, senior airline analyst over at COWEN. HELANE, it's always great to see you and get your thoughts on the sector. You're not any more positive than you were a couple months ago about the sector and in traffic trends?
Hi, Melissa. Thanks again for having me. No, actually, I'm not. Kind of disappointed because back in July, we saw about the same number of passengers per day we're seeing now. And that was a great recovery off the bottom. The mid-April bottom was 89,000 passengers per day. We're running between 600,000 at the low end right now and 800,000 at the high end. On peak days. And I think that's really disappointing because that's where we were a month ago, and we're still down 70% year over year. Basically, we're still hopeful to get to 1 million a day by year end, but I think it's going to take that vaccine to get people convinced, among other things, to get people convinced that they need to travel again.
There are varying degrees, though, of approval for this vaccine, though, HELANE. It's a sort of complicated story, right? There could be the emergency use authorization, which we're talking about in terms of the potential pre-election, late fall sort of deadline. And then there's sort of the broader use, which may come a little bit later on. So is it your anticipation, like when you think about a vaccine and the impact on the sector, is it enough for, let's say, emergency use authorization, which would not be for the general public, it would be for first-line responders and for very vulnerable parts of the population, that would flip the switch, so to speak, on airlines in anticipation of the broader authorization, or do we need to see this actually distributed to the public in order to see airlines see that bump in traffic?
Okay, so I think three things about that. One, yes, in a word. What you just said is so completely accurate. I think the idea of a vaccine will be hugely positive. So that's number one. I think the idea of when it's available to the general public is sort of little letter A, or number two, in the sense that probably some people will be the first in line, but there will be many people who will say, I will wait, X months or X weeks. Then the second thing I would point out is quarantines and governments closing their borders. So we have to segment the market into international and domestic again and say, well, domestic is likely to continue to recover, but this whole idea of quarantine rules and things being open make it very difficult to figure out where to go. And then finally, international, borders are still closed. There are still huge issues, even with open borders and testing. I think a key element is testing. Obviously, that will help hugely. And I thought the United news today, I don't know if you had a chance to see it because it came out very late, but they put an interactive map on their website, which I think is huge because it enables people to go on the web, click a state, see what the rules are, and make your decision in an informed manner about whether or not you can, you should or could fly there.
HELANE, it's Karen. Thanks for coming on. Let me ask you something. With some of the cost cuts that they've been making or will make if there are furloughed jobs as reported, what are the break-evens for, let's say, a Delta or a United what capacity they need to have to get to break even, which buys them more time?
Right. So that's that question is somewhat difficult to answer in the sense of this. Let's just say government aid continues into March. Then break-evens are relatively low, say 30% to 40%. Let's say government aid ends as expected on September 30th, and they go through with the furloughs, which we've calculated to be between furloughs and voluntary leaves to be somewhere in the neighborhood of 150,000 people. Then your break-even is going to bump up to closer to 60%. And that presupposes fares stay at second quarter levels. As demand comes back, we expect fares to decline. Because once airlines figure out that they can stimulate demand and people will fly, they will lower fares. And also, remember, airlines always lower fares. I shouldn't say always, but a lot of times they lower fares when oil prices go down. So we're at $1.10 a gallon for jet fuel. A year ago, we were $1.80. That's a huge cost improvement, about a 40% cost savings year over year. Even if it comes up a little bit, it's still a big benefit to them that they're currently really not taking advantage of.
All right. Helane, it's always great to speak with you. Thanks so much for your time.
Thanks again. Thanks, team.
Helane Becker of Cowen. Guy Adami, it's a pretty dire picture painted here of the airline sector.
Yeah, and what we don't talk about, we bring it up from time to time, is the fact that, obviously the profitable, the high margin business is the business traveler. And you just look at the Zoom stock that we talked about for the last week and a half, 2 weeks. I hate to say it, but I'll say it. Business travel is not coming back the way it was 6 or 7 months ago, because I think people have learned, hey, guess what? We don't have to get on a plane to go cross country to have a meeting. We can do it in the comfort of our own homes. And that is fundamentally going to change business travel, which is a real problem for the airline. So I don't know if they can return to those levels in the near future. I think one of the airlines today said it'll be 2024 before they get even close. That said, it doesn't mean the stocks can't grind higher from here. 27 in Delta has been the pivot point. We've talked about that for a while. I don't think you have to go racing into these things, but they should absolutely be on your radar screen as trading vehicles.